Hello everyone. Today is Saturday, August 24. Let's take a look at a few charts and see what we can find out what's going on with the markets right now. The big news this past week was the FOMC meeting. It looks like the Fed will start to taper. What that means is they've been putting out $85 billion a month to buy up government bonds to help to support the economy and stimulate it, get it to grow again. And they have been indicating that it's likely that they're going to slow that process down. So they're going to be putting less money into buying bonds. That's been making a drag on the U.S. stock market. We've seen it pull back more and more because people are getting leery. There's going to be less money going into these bond market purchases. So interest rates might start to go back up. They feel like that's going to have a negative effect. Whether it will or not, we don't know yet. You can look back in history and see that there's plenty of times where the bonds, the interest that is on the bonds, will go up and the stock market will go up simultaneously. But right now, it's causing a little bit of a worry. Not only that, the market has been worrying, the market has been pulling back. But keep in mind that all year so far, and we're in August now, for 8 months, we haven't had a 10% correction in the markets. And that's highly unusual. It's been 1945 since we have not had a 10% correction in the market. So it's normal to have a correction. We should expect a correction. So to see a little bit of a pullback after such an enormous bull market is really not that problematic. So we'll see how long it lasts. The less government intervention, the less we'll have a fixed market. So we don't have a free market right now. The government's kind of taken over things, and we have this acronym now, TINA, which stands for There Is No Alternative, which means there's no alternative to stocks, and therefore the stocks keep going up. Now, how does that benefit us? Well, we're going to look at different currency pairs and see who benefits from this and who benefits from the tapering. Now, first chart we're looking at here is the Australian dollar Japanese yen. Okay, now we're in a fairly narrow range right here. You can see at the low it's more or less around 86, and at the high it's around 90. So if it breaks to the upside, we'd expect it to go up to here to about that 93. Now, where do we expect it to go, up or down? See right over here we have the MACD, it's going up. So it did start to come back down just a little bit in the last bar, but besides that it's on its way up. So if I had to guess based on the knowledge or the information we have right now, I'd say it's going to break to the upside, which means we'll see higher prices in the Australian dollar versus the Japanese yen, and we typically see that as the U.S. stock market goes higher. So we might have a momentary reprieve in the stock market, and then we'll see it rally. Nonetheless, what we're seeing right here in the Australian dollar Japanese yen is a little bit of a sideways movement, slight bias to the bullish side of things. Okay, our next chart, we're looking at the Australian dollar versus the US dollar. Now, obviously, we've been in a downtrend for quite some time. The market is below the moving averages, and the moving averages are pointing down. The MACD looks like it's weakening, and it's about to roll over as well. So don't be surprised if you see the low formed just a short while ago on this bar here doesn't give way. So that low is at 88.48. So again, don't be too surprised if you see that low taken out. And when it does, you're going to want to get short. And I'm just looking for the next chart here. Okay, here's the Euro US dollar. Obviously, you can see it's been acting very strongly as of late. Now, here's something that I want to point out. We've seen the markets rallying But here we're watching the MACD getting weaker and weaker. This is an ominous sign. It's telling you that the internals of the market are weak. So right now we're at a double top. We have peeked our head out above it, although we have not closed above it yet. So we're kind of on the edge of closing above it. Right here on this bar, it was on the edge. It may have just peeked its head out. It may have closed above it. It's real close, but it was for one day and then it's pulled back. I'm a little bit leery of this market going much higher because of this MACD getting weaker and weaker. When I see this moving average cross down, I'd be ready to sell this with the anticipation of it dropping back down to these lows again. And we're moving on to the next chart. Now, this is the Great British Pound Japanese Yen. And you can see it's more or less sideways. It has been moving up recently. The MACD has been getting stronger, and our crossover right here would have given us a signal. So certainly be long, but there's plenty of resistance right here. So you're going to want to be careful. If it gets up to there and can break through, might have some more room to run. But it hasn't really shown much desire to go higher than where it is. It's been channeling for quite some time now. Now we're going to look at the Great British Pound versus the US dollar. Now this chart looks a lot like the Euro US dollar. The one difference is you'll notice the MACD was not acting the same. We do still have a double top here, and it looks like the moving averages are rolling over, but that could be very short term. So we're going to want to keep an eye on this pair to see if it breaks out into new highs. Could run a little bit higher. If it can't break out, when we see this moving average cross down, expect it to get down to this low initially and then all the way back down to the bottom of the channel. And here we're looking at the New Zealand dollar versus the US dollar. It came down, it's been basing for a while, keeps hitting at this low. It's not at the exact low, but you can see it's been stopping right in this area as well. So if this area holds, that's fine. We might start basing for a little while. We'll start doing sell premium strategies on the options to take in some money. If it breaks through this lows, this could go a lot lower. There's no other support anywhere around. Now we're looking at the the US dollar versus the Swiss franc. There's really not much to tell here. It's been coming down. Here's down here is the bottom. We're really close to that now. The last time it's come down, it's made its move up into this 97.50 area on several occasions. So we're down at the low. If it starts to turn up again, expect it to go back up to that area again. And the US dollar versus the Singapore dollar. Well, this is a really narrow trading range. So we have a high of around 128.50. The low is around 125.50. So there's really not much to say here. Traded in a range. I personally don't like ranges. I like to see trends. But you can certainly sell premium while it stays in that range. So that's all I have for you today. Keep an eye on the markets and make sure you trade hedged.